Okay. Let me, first of all, thank you so much and thank you for the opportunity. Great to be here. My name is Tanmai. I am the CEO and founder of a data aggregation company called Canopy. And we are in the business of helping people make sense of their finances, helping people make sense of their assets. We cover every asset class in every market, in every currency in the world. So we cover equities, bonds, real estate, art, and of course, crypto. So what my perspective on this is, how does crypto fit into an overall portfolio, how to report on it, how to analyze it, what do we see people doing, et cetera, et cetera. Because any rational investor will always diversify. You will have some exposure to every asset class, but you should never have 100% exposure to a single asset class, whatever it might be, because of prudence. So what I want to show you now is a typical customer that we see. We deal with all shapes and sizes of customers. So we have a few billionaires on the platform, and we have a few mass affluent customers as well on the platform. So at a philosophical level, the data requirements are actually not that different. This is a typical, or this is about as complex as it gets. So you have a family, you have a trust, you have multiple family members, and you have all sorts of investments in the family. And these might be real estate, these might be illiquid investments, startups, arts, these might be banks, these might be cryptos, these might be brokers, these might be anything, right? So that's the big picture that we see. And then, of course, different family members might have different holdings and might own different percentages of various assets. And what we see is the first thing you need to do is to get all your data together in one place. So your real estate data will come in, and it might come in as Excel, PDF, paper, whatever. Your private equity data will come in, and your financial assets, and I'll include crypto in that, will come in either as a data feed or as an API or PDF or Excel or anything. From more sophisticated players like on-chain, we will get an API, so we will be able to read it very easily. The good thing about crypto is that in fact, all custodians are quite tech savvy by definition, and therefore they're able to give us data quite easily with very little friction. So that's the good part. The banks themselves are not quite there yet. So therefore, what we see is that we have to, there's some effort taking data out of banks, and there's some cleanup required and all that. We do that. And then we provide white glove service where we are reporting on all sorts of levels, and we are doing all sorts of analytics and analysis. We run it on a daily traded basis. So we have customers who have cryptos. In fact, we have customers who are kind of arbitraging cryptos between various coins, and they are kind of running an arbitrage algo of sorts. So we support that. We are also, incidentally, the best data analytics solution in Asia. This is, I think, for the last, you have to update the slide, for the last 3 years. That's because, again, we are providing a solution that makes sense, and it's basically about getting a holistic view of your finances. So data comes in, and we do everything else. That's how the process works. I can walk you through details on how we do real estate and everything else, but I think that will most probably be a little too boring for people on this seminar. But what I can do is, let me show you what login will look like on Canopy on an account which has both crypto as well as regular assets. So I've created this dummy account, and let me show you how this would kind of work. So we are logging in, and this is a customer. I've just created 2 pretend accounts. So there is a demo account which has your, your uh, uh, fiat assets, if you want to call it, and then there is a crypto asset. So there are 2 portfolios here. We will support any number of portfolios. So this 2 is just a sample here. What we allow you to do is you log in and you see how much money you have, and you can go back and see how your money has moved, over time, over any kind of period of time. Then we show you other interesting things like asset allocation. Actually, let me show you something else as well. So what you see here is, and this is the point I was trying to drive, is that crypto has a place in your portfolio. It should not be 100% of your portfolio. It should not be 0% of your portfolio. There is a optimal number. Different numbers work for different people, but that's something I would leave to people. But we are there to support you in seeing your asset allocation and seeing your exposure and seeing everything else. So we will show you your asset allocation. You'll be able to drill in and see, like, for example, I'm showing you how much equities you have, etc., or what has been your performance. So we are calculating your performance over the last 1 year, or you can maybe even go back as far as back you want. So this account has data starting 2014. So you see that there was performance here. Then we saw the crash beginning of last year, and then the market has come back up very, very nicely. But rather than again drone you on and on about how the platform works and how various transactions can be seen, I want to just take you back into some of the more interesting features of Canopy and how data can be analyzed. So what I'll do now is I will simply deselect the other account. And I have loaded a demo account here. This is a pure crypto account, and this is a pretend account. It's not real data. And what you see is the daily valuation of this account. And this particular account, now if you go back into asset allocation, you will see cash. We think of crypto as a currency, so we call it cash. So this, as you can see, is actually held entirely in Bitcoin and entirely in the pretend on-chain custodian account. Anyway, going back, so if I go back and zoom out, you will see that you had some 50,000 crypto in your account, and then it kind of went up nicely, and then you made money, and then we've seen a kind of a drawdown. The most used feature in Canopy is customers typically wonder as to what happened. My net worth went up. Did it go up because I made money? Did it go up because I added more money to the account? Your account could go up or down for various reasons, right? It could be profit, it could be dividends, it could be inflows and outflows out of this account. So we have this feature which says explain change. And the way this works is that you basically decide what is the time period that is of interest to you, so let's say I'm again just choosing a simple time period. So let's say I decide to choose from 27th of November till the peak, which was mid-April. So 27th of November last year till 14th of April. This year, there was a very nice appreciation in value in this account. And the customer might be wondering what happened. So you press this explain change button, and what is happening now is we are recalculating. So what we will have, and I'll show it to you in just a minute, we have all the transactions that you have done in your crypto account. and we are just revaluing them, and we are explaining what happened and what money was made and what money was lost. So what you see here is your starting net worth of 27th of November was $58,000. Ending was $222,000. This particular account has a base currency of US dollars. You can choose any currency to be base currency. You can even choose a crypto to be base currency. So you could say my base currency is Tether or any of the stable coins if you feel like, or even Bitcoin if you want. It really depends on how you want to run your life. In this account, I've chosen US dollars as the accounting currency or the base currency. So $58,000 was basically what you had, and it became $222,000 over this time period. There was a change of 163,000, and all of which is performance. So what that means is that this was an inflow outflow. This was pure trading gains. In fact, you can see details here. So what we do then is we explain what this number or how this number came about. It's hard to call realized earnings in currency trading. So it's not mark to market. It's simply basically FX revaluation, which is your revaluation of your holdings. So if you click this, you see that there were three coins. There was Binance, there was Tether, and there was Bitcoin, and the money was made entirely in Bitcoin. So you can kind of see that. You can actually download these calculations, so you can sort of figure out how we arrived at these numbers and get into more details as well. Yeah, so basically you'll be able to download the calculations. The other things that we play around with or let you kind of get a sense of is first thing is transactions. So again, what I've done is I have there were two accounts, and I'm only showing you one account at this point. And these were all the transactions that were done. And as you can see, it's a strategy where you're buying and selling various currencies. You can actually pull out the ticket itself and see what was the ticket, what was the amount, what was the quantity, etc., etc. So just put out this. Typically, when you do a spot transaction, you will see two legs. So there is a buy and there is a sell, and you will see that. So you can see the transactions. You can actually download this data and play around with this if that's what you want. But the same thing now, if instead of just seeing your crypto, you wanted to see all your transactions. So we can do that quite easily. So you just select that, and you now basically are seeing everything. So you're seeing property, you're seeing regular equity shares, and you're seeing crypto. So it all comes into a one single package very, very seamlessly, and it shows you everything. So now if I go back to my dashboard, and these are pretend accounts, so it's not like I have 16 million sitting in an account doing nothing. But what you see here is now you start seeing a holistic picture, right? So you see that when I now look back at my asset allocation, you will see that I have 16.5 million sitting with Credit Suisse, again, pretend custodian, and I have some money sitting with on-chain. These are my breakdown. The Bitcoin will actually come in cash. So if I look at it, so you can see what are the various cash that I own. So I have Swiss francs and Bitcoin and dollars and all, and then Australian dollars, I have an overdraft. The sort of what I'm trying to illustrate, or the point I'm trying to make here, is that you have to think of crypto as part of your portfolio, and you should kind of take a balanced view, and you should be able to see a balanced view. And this is something that Canopy can really assist you with. In fact, we have customers who own crypto, and they are kind of using it for that purpose exactly.
If you don't mind my interrupting, Tanmai, just real quick on that, and then there was one other question I'd like to address now too. Is how much, for those that are viewing it as a diversification, the customers you talk to, whether they're retail or family office, that could be different. I mean, what percentages are they allocating to crypto and using in your aggregation in thinking about diversification?
At this point, of course, our bias as a company is a little bit towards the high net worth and the family offices,
Yep.
because these are people who really need help in putting all this data together, and we see them doing allocations to crypto. They don't trade very often. They do, it's largely buy and hold, and they in fact do take some leverage, but it's not a massive allocation at this point. It's like a 1-2% kind of number.
1%. So yeah, okay. So it's all right. That makes sense. And then go ahead.
And we of course have some other clients who are crypto hedge funds or who are algorithmic traders. And what we are doing for them is not providing the trading infrastructure. We are providing the reporting infrastructure. So end of the day, we'll get a dump of all their transactions, and what we will be able to do is run our calculation numbers and basically tell them how much money they made. Of course, they know how much money they made, but it's better if a third party comes and kind of does it for you and puts it in the right perspective and all that.
Yeah, so you're in a way kind of a back office function for the trading funds that want the data organized for their own internal record keeping, but also reporting out to their investors.
That is absolutely correct. Yes. Okay. And these are the 2 or 3 things that we do, which is we are basically helping you make sense of it, and crypto is part of that whole puzzle. Effectively.
Yeah. Well, and as one anecdote, I will share this. For those listening that are more interested in the trading, whether you want to take it out to other investors or do it on your own, having some sort of function like this before you start doing the trading is really important. Because I've got some people that have called me the last year and they're like, man, I'm on 12 different exchanges and I bought 50 currencies 8,037 times. Do I have to make those spreadsheets? And it's like, yeah, your tax authority is going to want to know that. And so that's what because you have the functionality. I don't mean to misrepresent, but you make that easier for
that is absolutely correct. So basically, what we do at a very philosophical level, and in fact, I have a I have a slide for that, where we bring all your data in one place. So let me just show you how that works. So sorry to scare you a bit, but this is essentially what we're doing, which is that we are reading various systems. So we are reading, it could be a bank booking system, it could be PDF, it could be a paper, it could be API, it could be Excel sheets, it could be anything. And the basic philosophy that we have is that everything is a transaction. So essentially what we are is a big trade plotter. So we are a massive trade plotter, but more importantly, we are a single trade plotter. So whether you buy Bitcoin, you buy Binance, you buy Tether, you buy dollars, you buy Netflix, you buy a house, you buy a painting, or you buy a horse, it goes in the same trade plotter very deliberately. Everything is a transaction. So what happens is that all this data comes in and we are now processing it. So it's sitting inside our infrastructure and being processed. And then we only extract transactions. So basically what I'm saying is, I don't care who you traded with. I don't care what you traded. We are extracting all your transactions from all your sources. So if you're trading with 5 exchanges, okay, we bring all your transactions into one place on one security master. So effectively, it doesn't matter what code, currency code, or anything else your custodian uses. We will standardize what's it called. We will standardize what the transaction type is. So some people call it buy and some call it purchase, whatever. So we will standardize what you did. And we will standardize the security master. So the same asset, when it's bought across 5 people, it's called the same name very deliberately. That's why it goes into one trade plotter. Then the next thing we do is we calculate closing positions. And we reconcile with the statement. So what you see, the trick here is that I never enter positions into the system, because then you don't know if this is, you got it right or not. I only enter the transactions and then I calculate closing positions and I reconcile. So what this means is that this is my first data sanity check. So this is the check we do when, so if you send us a bunch of statement and you say, these are the trades I did and these are my closing positions, those trades have to add up to the closing positions. Actually, your opening positions plus all your trades have to mathematically be equal to the closing positions. And if that is not the case, something went wrong. And then we check, we ask questions, maybe somebody reported wrong, maybe somebody made a mistake, maybe we made a mistake. But this is my first check. The second check is I blend in market prices and I plot performance. And the performance chart should always be smooth. So it should look like performance. It shouldn't have spikes. Spikes are usually a visual indication of something went wrong. So performance chart looks something like this. But if you put a trade wrong, if you got a decimal wrong or you got something else wrong, this thing will look like a spike. Not only that, because we also deal not just with crypto, we deal with regular assets as well. So you have corporate action. So suddenly the number of shares has doubled, but the price has halved because there was a stock split, and you see the spike. So you need to go and figure out and make sure that you book it correctly and your data is correct and all that, right? So that's kind of the deep philosophy that's happening. Then we are convinced that this data is clean. Once we are convinced the data is clean, it goes into our analytics engine, and then it goes into a database. So we actually create a separate database for each client, and then that feeds the front end. So this is the process we are following. And I literally don't care who you're trading with, and literally don't care what you're trading. We will be able to process it, we will be able to handle it, and we'll be able to bring it to to a logical conclusion, and we'll be able to show you how much you're worth, how much money you made, what has made you money, what has lost you money. And in fact, I personally find that the loss-making trades, studying your loss-making trades is the not the cheapest, but the fastest of learning.
Yeah, that's right. Well, I really love the redundancy you built into. That makes a lot of sense, and the smoothing functions and visual inspection as well. One other question that, and I apologize too for interrupting the flow of your
Go ahead.
presentation. One other question that came up in the chat too is the number of institutions covered and how many AURs you have and various kind of clients and accounts.
So we because like I said, we deal with the high net worth, so our AUR is a bit large. We are at about 140 billion at this point, and that's because in my clients, I have 18 billionaires. So a billionaire is by definition a billionaire. So
yeah. It's good to have a couple of those.
Yeah, and we have a lot of clients who are of large assets, and we are reporting. Again, to clarify, we don't advise, we don't transact, we don't custody, we are nothing. We are purely bookkeepers or scorekeepers or analysts, or we'll tell you what happened. But we will not touch your money. We will, in fact, the one interesting feature of Canopy, which I forgot to mention, is that we are an anonymous data processor. So I don't want to know who you are. And because I see that as a risk to you, I see that as a risk to me. So we actually, in our data structure, don't have a place to store your name or phone number or address. The only connect we have with our customer is an email address, and because I need something to connect with my customer, but you can create a Gmail account, michaeljackson@gmail.com, if you feel like, and we'll call you Michael Jackson. Literally, I prefer it that way, because that way, that's an added layer of security. So you are our client, but if I meet you on the street, I don't know who you are, and I like it that way.
I like that too. I'm trying to get the right Michael Jackson lyric to match here. Billie Jean was not my customer. He was just an email who says that I am the one. I don't know.
So please ask any more questions, because I wanted this to be as sort of interactive as I can go into real detail into how we process data, but I think it might most probably bore people.
I have a couple of questions, just me nerding out with you here. At the same time, if anyone else, while I ask one more question or one or two here, if you have anything you want to throw in the chat, please feel free to do so. One dimension, watched one of your interviews previously where you talked about kind of keeping the score, and I'm much clearer on how you keep the score here on assets and performance. What about underlying fees? Can you tease out what the underlying management fees, trading fees, even and in crypto too, in particular, of which different exchanges that have all sorts of complicated fee structures? What
Yes.
capabilities do you cover there?
No, it's part of your it's part of the service, right? So because I have every credit, every debit in every account. Absolutely. I mean, we will tell you fees. I don't think we book fees in this one, but you will see them in this box here. So you will see the fees that were paid, and in fact, there are customers who use us to file their taxes because you need to be able to track not so much in crypto, but in regular bonds and equities. You get dividends, and there are withholding tax on dividends, and then then you are sitting in a jurisdiction where you might have a double taxation treaty with a certain country, and therefore you are able to claim back or not claim back or whatever, right? So these things become complex. So yes, we definitely help people with that.
Okay, that's great. What about specifically zeroing in on the crypto investments your clients have made? Are there any common mistakes, especially people new to the space, have made that your reporting has helped them clean up? Especially in thinking of the people on the call who are new to it. I mean, how could they best use your software or the advancements that you
yeah,
gave?
so I find that it really doesn't matter whether you are new or you are old. The human brain is able to only process data up to a certain point. And it also tends to remember some things and tends to forget some things. So having a systematic process always helps. And I find that even in my own trading account, sometimes I feel that I've had a great month, and it turns out that it was okay, it wasn't great, and the other way around, right? That you felt like you got wiped out, and you go back and you say, you know what, it's not that bad. I will make it back. So it does happen, right? And therefore, I feel that it's not so much a question of whether you're a newbie or you're sophisticated. It does make sense to have a consistent way of doing all your calculations and a consistent way of doing all your reporting, because that's that's finally it's another pair of eyes, effectively, although it's electronic eyes, but it's another pair of eyes, and we are able to kind of bring it together and bring it to one place.
Okay, great. All right. I don't have any other questions coming through. I have a couple I may throw out in a bit, but why don't you go ahead and finish what you want to share? And
yeah,
probably,
no, I'm sort of coming to the end of my my presentation. So I wanted to show you just last one thing, which is that
great.
I was showing you the performance chart, and initially I was showing you the performance chart of the entire account, and we calculate performance in two different ways. So we calculate performance in percentage, but we also calculate performance in dollars or whatever else is your base currency. So what you might be looking at or doing is you look at this. Yeah, I'm just looking at the crypto account, and you see that this is my percentage plus or minus in the account, and this is my dollar plus or minus in the account. So what we do find a lot of customers do is they pick the peak and the trough, and you kind of zoom into that, and then you ask for an explanation. So this is essentially showing you, why this happened or what happened. So you made 84K, and again, of course, in this case, it's all Bitcoin. But if you had multiple coins or you had multiple other assets, then we will be able to kind of break it down very nicely.
Okay, great. What so I've in the States, the two biggest platforms we see are data aggregator services. Black Diamond is very big, kind of advent, and then Adapar is the new kid on the block that's heavily for alts and whatnot.
Yeah.
How would you compare yourselves to those other solutions on the market? I'm just curious.
So our first customer was stolen from Adapar. So we know both these guys quite well. So the thing about Adapar is that they're very North American centric. So is Black Diamond. And life is a little easier in North America in the sense that the listed assets come out very easily through APIs. Pretty much every bank has an API, and you can go to an API aggregator. For example, you can go to a Plaid, or you can go to a Yodlee, or buy all accounts or whatever, and you will be able to connect to your listed assets with banks and brokers. Then all the crypto exchanges have APIs, so you're able to connect to them electronically as well. The only part which is not very electronic is alternatives, which is largely private equity and hedge funds.
You got to do a lot of manual on that,
and it's a very PDF driven process. So we of course cover all asset classes. We cover the alternatives, we cover crypto, we cover everything else. But when you bring that to this part of the world, when you bring it to Asia and you bring it to Europe, what you realize is that the banks are not as helpful. So banks either cannot and very often will not give you the listed assets via API. So if you look at the regulatory framework, so let me give an example, right? You are in Singapore. We are the fintech capital of the world, but you don't get, if you are a customer, if you're not an institutional customer, let's say you're a retail customer, and you went to any of the banks in Singapore. So you went to DBS, you went to OCBC, you went to UOB, you went to Maybank, you went to StanChart, and say, can I please have my data via an API? And they will say, sorry, but we don't support that at the moment, right? So the big difference that happens when you're looking at somebody like Adapar and somebody like Canopy is, yes, we are cheaper, better, brighter, etc., but we also process data from these guys. These guys who don't have APIs as of the moment, because by law, these banks are required to give you at least a monthly statement, which is usually in PDF, and we will take PDF as a bona fide data source. So what we are basically doing is data is coming in, and we are processing it, and we're standardizing it, and this is how it's going. So
it's not through API, but it's through your technology of scanning, which is why you're also doing those other checks. Exactly. The redundancy checks to make sure there wasn't a data entry error in the scanning process.
Exactly. Now, again, to clarify, I am not saying we don't take APIs. API is the first choice. We always go and ask nicely, please give me an API. But unfortunately, in Asia and in Europe, the answer very often, most often, is no. So then what do you do, right? So what we find is that certain players will give you APIs. So interactive brokers, like that. Saxo, like that. Tiger, no. And someday they will, but right now they don't. So Philips don't. So that's the blocks that we are this thing. So what we do is we go and ask nicely for an API. If it's available, perfect. Everyone's happy. If it's not available, then I know that by law you're required to give a monthly statement, and I know that I can read any PDF format there is. So I will take that and process it. Now, the disadvantage is that the PDF statement comes once a month, and it comes a few days after the close of the month, and then it takes a bit longer to process. So we have a solution. It's not the best solution. It is the best solution as of the moment. Because
given the constraints,
given the constraints, right? So it's we make the best possible use of all available data. That's the philosophy. And the day the bank says, okay, you know what, from tomorrow I'm giving you API, boom, we just switch into API, and then data starts fine. The other thing that I want to clarify is no bank and very few brokers are able to give you a real-time feed. So almost every bank system is a batch processing system. So what that means is that they will enter all the transactions into a booking system or their internal system, and then overnight, calculations will be run. and then they have various uses of this data. And even if the bank is giving you an API, the earliest you get it is next day lunchtime. And some banks operate on settlement date instead of trade date. So the trade will actually enter the system on settlement date. So so if you're trading equities and equities settle T+2, T+3, then you're talking 3-4 days behind your actual trade day. Cryptos don't have this problem because cryptos will all the exchanges will report quite quickly. But what I'm essentially trying to say is that when you're looking at your holistic picture, you have to have at the back of your mind that you have multiple data sources, all of whom deliver data at different frequencies and at different points in time, and you need to be able to sort of keep that in your head that this is where I am.
Yeah, no, that's well said, and I can understand the data timing issues, right, of the consolidation.
Yes, absolutely. Because you might say, "Oh, I've just traded. Why is it not in my account?" The reason is that the bank hasn't reported it yet. So it will show up when. Of course, we allow you to enter provisional trades yourself, and you can do that. And sometimes people do that. We also allow you to upload your own trade blotter and in a spreadsheet, and you can just do it and start using the system. So that, of course, is there.
Okay, great. Well, I don't have anything further. I don't see any other questions in the chat. So unless you have any closing comments.
No, nothing major actually, but thank you so much for the opportunity, and it's great to be here, and very exciting seminar. Thank you.
Okay, well, thank you for your time. Hey, Leo, I see you popped on there, buddy.
Thank you very much.
Okay, thank you. Bye.